Europe, once a beacon of economic stability, now finds itself grappling with a myriad of challenges that threaten its prosperity. The continent, traditionally known for its resilience, is facing a period of stagnation that is exacerbated by recent geopolitical and economic events. The energy shock following Russia's invasion of Ukraine in 2022 has reverberated across European economies, leading to sluggish growth and heightened uncertainties. Additionally, the looming specter of tariffs from major trading partners like the United States and China adds further pressure on Europe's already fragile economic world. The impact of these recent events cannot be understated. The energy crisis, marked by soaring gas prices and supply disruptions, has upended the industries, strained household budgets, and dampened consumer confidence. Europe's economic growth, which had already been modest in previous years, has been further hampered by these unforeseen shocks. Moreover, the potential return of Donald Trump to the White House brings with it the threat of renewed trade tensions and protectionist measures that could further impede Europe's economic recovery. Amidst these challenges, the need for strong economic growth has never been more pressing. Europe's defense spending, already under strain due to budgetary constraints, requires robust economic growth to sustain and enhance its capabilities in an increasingly uncertain geopolitical landscape. Furthermore, addressing the disillusionment among voters, who are increasingly drawn to populist and hard-right parties, necessitates tangible economic improvements that directly benefit the populace. One of the critical imperatives for Europe is to achieve its green energy goals. The continent has made ambitious commitments to transition towards renewable energy sources and reduce carbon emissions. However, these goals require substantial investments, technological advancements, and a conducive economic environment to be realized. Strong economic growth is not just a desire but a necessity for Europe to fund its green initiatives, support innovation in clean energy technologies, and create a sustainable future for generations to come. In this video, we will delve into the specific economic challenges facing Europe, analyze the impacts of recent events such as the energy crisis and geopolitical tensions, and explore potential strategies and responses to navigate these turbulent times. From trade relations to fiscal policies, from innovation to international cooperation, Europe's path to economic recovery and sustainable growth requires a comprehensive and forward-thinking approach. China's economic policies and growing influence are significantly impacting Europe's economy, particularly in key sectors like manufacturing. The strategic decisions made by Chinese authorities, including subsidies and a focus on green goods such as electric vehicles, EVs, have reshaped competition dynamics and presented challenges for European manufacturers. One of the notable impacts of China's economic policies is its emphasis on subsidies to boost domestic industries, including the production of green technologies like EVs. This strategic focus has enabled Chinese firms to rapidly expand their market share in the global EV industry. As a result, European manufacturers, particularly in the automotive sector, face intensified competition from Chinese counterparts who benefit from government support and lower production costs. The influx of Chinese EVs into European markets has disrupted traditional market dynamics and posed challenges for established European automakers. Chinese brands, leveraging competitive pricing and technological advancements, have gained traction among consumers, leading to a shift in market preferences and increasing pressure on European manufacturers to innovate and adapt. Furthermore, China's dominance in renewable energy technologies, such as wind turbines and solar panels, has impacted Europe's renewable energy sector. Chinese firms, backed by substantial investments and state support, have become major players in global renewable energy markets. This competition presents both opportunities and challenges for European renewable energy companies, as they navigate a landscape shaped by Chinese innovation and market penetration. In addition to the automotive and renewable energy sectors, Chinese competition extends to other industries where European manufacturers have traditionally held strong positions. For example, in the telecommunications sector, Chinese companies have emerged as formidable competitors, offering competitive products and services that challenge established European players. The challenges posed by Chinese competition are multifaceted. European manufacturers must contend with not only price competitiveness but also technological advancements and market expansion strategies employed by Chinese firms. This requires European companies to invest in research and development, enhance their product offerings, and differentiate themselves in increasingly competitive markets. Moreover, the rise of Chinese manufacturing prowess has raised concerns about fair trade practices, intellectual property rights, and market access. European policymakers and industry leaders are actively engaged in discussions and negotiations to address these issues and ensure a level playing field for European businesses. Despite the challenges, there are also opportunities for collaboration and partnership between Europe and China in areas such as clean energy technology development, supply chain integration, and sustainable economic cooperation. Finding a balance between competition and cooperation will be crucial for Europe to navigate the complexities of China's impact on its economy and capitalize on emerging opportunities in a rapidly evolving global landscape. The looming threat of a trade war between major economies, particularly the United States and Europe, carries significant implications for global trade and economic stability. A trade war characterized by escalating tariffs and retaliatory measures could have far-reaching consequences for exporters and industries reliant on international trade. The potential consequences of a trade war are multifaceted and complex. Firstly, the imposition of tariffs by the United States on European goods could lead to increased costs for consumers and businesses on both sides of the Atlantic. Tariffs act as a form of taxation on imported goods, resulting in higher prices for consumers and reduced purchasing power. This could dampen consumer demand, impact supply chains, and disrupt market dynamics. Moreover, retaliatory measures from Europe in response to U.S. tariffs could further escalate tensions and intensify the trade dispute. European exporters, particularly those in sectors with significant sales to the United States, would bear the brunt of retaliatory tariffs. Industries such as automotive, aerospace, and agricultural products, which have substantial exports to the U.S., could face challenges in maintaining competitiveness and market share. The impact of tariffs and trade tensions on European exporters extends beyond financial considerations. Uncertainty and volatility in international trade relations can erode business confidence, hinder investment decisions, and impede long-term planning. This could stifle innovation, growth, and job creation, leading to economic stagnation and reduced prosperity. Furthermore, trade wars have broader implications for global trade flows and supply chains. Disruptions to established trading relationships and market access could lead to shifts in production patterns, sourcing strategies, and investment decisions. European exporters may need to reevaluate their export destinations, diversify their markets, and adapt to evolving trade dynamics to mitigate the impact of trade tensions. In addition to direct economic consequences, a trade war could have geopolitical ramifications and strain diplomatic relations between trading partners. Tensions arising from trade disputes may spill over into other areas of cooperation, exacerbating political frictions and hindering collaborative efforts on shared challenges such as climate change, security, and global governance. To navigate the potential risks of a trade war and mitigate its adverse effects, proactive measures and strategic responses are essential. European policymakers and business leaders must engage in dialogue, diplomacy, and negotiation to de-escalate tensions, resolve trade disputes, and uphold multilateral trade agreements. Additionally, diversification of export markets, investment in innovation and competitiveness, and advocacy for fair and transparent trade practices can strengthen Europe's resilience and adaptability in a turbulent global trade environment. Overall, the threat of a trade war and tariffs underscores the importance of maintaining open, rules-based, and mutually beneficial trade relations. Collaboration, dialogue, and cooperation remain key pillars for fostering sustainable economic growth, prosperity, and stability in an interconnected and interdependent global economy. As Europe navigates through a challenging economic landscape marked by geopolitical tensions and trade uncertainties, adopting a strategic and balanced economic policy is paramount. Rather than resorting to protectionist measures that can stifle innovation and hinder market integration, Europe should pursue a holistic approach that promotes trade, fosters innovation, and strengthens market integration within the continent. First and foremost, it is crucial to avoid succumbing to protectionist impulses. While protectionist measures may offer short-term relief for certain industries, they often come at the cost of broader economic efficiency, competitiveness, and consumer welfare. Tariffs and trade barriers can lead to reduced market access, higher prices for consumers, and disruptions to supply chains, ultimately hampering economic growth and prosperity. Instead of erecting barriers to trade, Europe should prioritize open and fair trade practices that encourage competition, spur innovation, and enhance consumer choice. A key pillar of Europe's economic strategy should be investment in infrastructure, education, research, and development. Investing in modern infrastructure, such as transportation networks, digital connectivity, and sustainable energy systems, can create jobs, boost productivity, and attract investment. Moreover, a well-educated workforce equipped with the skills and knowledge for the digital age is essential for driving innovation, entrepreneurship, and economic dynamism. Research and development, R&D, play a pivotal role in fostering technological advancements, supporting industries, and enhancing competitiveness. Europe should incentivize private and public investment in R&D, promote collaboration between academia and industry, and prioritize strategic areas such as clean energy technologies, digital innovation, and healthcare solutions. By investing in innovation, Europe can position itself as a global leader in emerging industries, create high-value jobs, and drive sustainable economic growth. Furthermore, market integration within Europe is critical for unlocking the continent's full economic potential. Despite progress in areas such as the single market and the Eurozone, there are still barriers to cross-border trade, investment, and labor mobility. Europe should prioritize efforts to remove regulatory obstacles, harmonize standards, and deepen economic integration across member states. Enhancing the ease of doing business, facilitating cross-border transactions, and fostering a level playing field for businesses can unleash efficiencies, improve competitiveness, and spur economic activity. In conclusion, Europe's economic policy should be guided by a commitment to open markets, innovation, and integration. By avoiding protectionism, investing in infrastructure and research, and promoting market integration, Europe can navigate current challenges, capitalize on emerging opportunities, and build a resilient and dynamic economy for the future. Collaboration, cooperation, and forward-looking policies will be key in shaping Europe's economic destiny and ensuring sustainable prosperity for its citizens. Europe stands at a critical juncture in its economic trajectory, facing a confluence of challenges and opportunities that require strategic foresight and proactive measures. Throughout this video, we have examined the economic landscape shaped by factors such as geopolitical tensions, trade uncertainties, and technological disruptions. Against this backdrop, Europe must chart a path forward that promotes collaboration, embraces open trade, and prioritizes strategic investments to drive sustainable economic growth and resilience. Key to Europe's future economic success is a commitment to collaboration and cooperation. In an interconnected global economy, collaboration between governments, businesses, and international institutions is essential for addressing common challenges, resolving trade disputes, and fostering economic stability. Europe should leverage its diplomatic networks, engage in constructive dialogue with trading partners, and advocate for rules-based trade agreements that promote fair competition and market access. Trade agreements play a crucial role in facilitating trade, investment, and economic integration. Europe should prioritize the negotiation and implementation of trade agreements that enhance market access, reduce trade barriers, and promote regulatory coherence. Strengthening ties with strategic partners, diversifying export markets, and expanding opportunities for European businesses in emerging markets will contribute to Europe's economic resilience and competitiveness. Furthermore, strategic investments in areas such as infrastructure, digitalization, clean energy, and research and development are fundamental to driving innovation, productivity, and economic growth. Europe should allocate resources towards projects that enhance connectivity, promote sustainable development, and support industries of the future. Investing in education, skills training, and workforce development is equally vital to ensure that Europe's labor force remains agile, adaptable, and equipped for the jobs of tomorrow. While the path forward holds promise, it is not without challenges. Political uncertainties, geopolitical tensions, and global economic shifts continue to pose risks and uncertainties for Europe's economic prospects. However, these challenges also present opportunities for Europe to demonstrate resilience, leadership, and adaptability. To navigate the challenges ahead effectively, Europe should adopt a proactive and strategic approach. This includes diversifying trade relationships, enhancing supply chain resilience, and investing in strategic sectors that drive innovation and competitiveness. Strengthening multilateral cooperation, promoting sustainable development goals, and fostering a conducive business environment will be key priorities for Europe's economic policy agenda.